and the world trips. We're so honored to have her with us here today. Let's kick off, though, with Mike McGlone in the wonderful United States. Mike, of course, senior macro strategist at Bloomberg Intelligence. We have Brent crude oil trading this morning up 1%, continuing its rise, as we've seen in oil traders, Mike, as reported by Bloomberg, flocking to the options, the safety of record options contracts, highest ever, 4 million contracts representing 4 billion barrels, as traders take refuge from unpredictable outcomes to supply disruption in the Middle East. Your thoughts, Mike, as we look at the current makeup of the market, oil trading in the mid-70s, a little bit stressed, but don't think dramatic, but yet a lot of people taking cover in the US. Your thoughts?
I appreciate you mentioning that article from my colleague Javier Blas. I met with him a few weeks ago in London. And he's making a good point about what's happening. People are using derivatives to hedge their risks and mitigate risk. But overall, crude oil is in a bear market. Grains are in a bear market. Most commodities are in a bear market, with the notable exception of the metals, copper, and most notably gold. And I think it's going to continue. The key thing you have to look forward to every day is we can see the risks of supply disruption, but there has been no significant supply disruptions. And even if we do have supply disruptions, it's a question of durability and how long they last. And what's happening is by keeping prices somewhat elevated above the U.S. cost of production, which is around $56 a barrel, it's increasing those forces of excess supply, as we see out of the U.S., even OPEC spare capacity. And there's diminishing demand from China. So we see what's happening. Also, you just look at diesel demand in this country is declining. Diesel demand in China is declining. So overall, I think crude oil is just a matter of time. It follows the example of what U.S. natural gas did. It got below its cost of production, below 2. What the grains are doing with corn bumping around 4. The key question is what stops it. On the global economic stage, supply disruptions usually are temporary. We haven't seen them. And every day the market goes by and worries about them. The macro to me is just for crude oil still what it usually does. It has to get to that low price cure after spikes to last year's high. So I still think to do that, you have to have lower prices to offset these excesses of supply versus diminishing demand.
Let's welcome Dr. Carol Knackley, CEO of Crystal Energy. Carol, of course, since we've had the chance to have you on last, Lebanon has been sort of caught in this terrible escalating crisis in the Middle East. And while I know geopolitical analysis and risk is not necessarily your forte, it is, though, something you watch closely and know well. So I wanted to get your views on where do you think things are at the moment. We saw the geopolitical premium sort of dilute out of the market through most of October. I mean, after the spike up in the early first half of the month, it came down in the second half. We're kind of going back up the ladder again with Blinken in the region, meeting with the leader of Saudi Arabia yesterday. Your thoughts on where this regional conflict's at, and are we still on the precipice of a possible further escalation in your thoughts?
Good morning, Sean. It's good to be back again on the show. Well, look, I mean, you cannot analyze energy markets and global economic trends and trade relations without understanding geopolitics and vice versa, because they are closely intertwined. Regarding the region, I wish I had a clear idea about where things are going. There's a huge degree of uncertainty here. And let me start with the one country that is very close to my heart, and that's where I come from, that is Lebanon. And since you mentioned it, I have mixed feelings about what's going on in Lebanon. This also illustrates what's going on in the mind of many Lebanese. So on the one hand, nobody would like to see their own country bombarded. Nobody would like to see the infrastructure of their own country destroyed. And especially taking into consideration the relative silence of the international community with respect to what's happening there, in addition to what has been happening in Gaza. So it's definitely something I find outrageous. Now, some would say that, oh, there is a silver lining in this, is that it weakens Hezbollah. It gives the Lebanese army an opportunity to strengthen its position, because in the past we used to argue that the Lebanese army is not strong enough and therefore you need the weapons of Hezbollah to protect the country. That has proven to be a wrong assumption or belief. So that could be for many a silver lining. And that's what you hear a lot from certain quarters in Lebanon. What really worries me today, in addition to the daily attacks that we are seeing from Israel on Lebanon, I don't believe in anything called targeted attacks. Just look at the videos, look at the buildings in Beirut, and you realize that there is no such a thing possibly as targeted attack when you bring a whole building down. But what really worries me is fragile sectarian divide in the country, because if I go back to the times of the civil war in the 70s, one of the main reasons was this kind of imbalance and the sectarian divide in the country with the influx of Palestinian refugees. And today what we're seeing is lots of Shia people coming from their own regions to other regions in the country, and it's causing lots of frustration. So I hope the Lebanese will keep their head cool and will not be dragged into this kind of tensions, domestic tensions, and that is really the main worry today. On the broader picture, I don't like to say I don't see a further escalation, because with the madness we are seeing, we should expect the unexpected. But hopefully, I mean, soon it's a matter of weeks before the US elections will be over, and that by itself can have some spillovers on reducing the level of uncertainty in the region. But so far, I don't see the region collapsing or falling into a very big, wide conflict. And we are seeing that sentiment also in the energy markets, in oil prices. Otherwise, we would have seen oil prices in much higher territories.
Let's welcome Narendra Modi, India's leading energy expert. There's many things I'd like to talk today about, Narendra, with you, but I'd like to just start with giving you a chance to give your thoughts on the sort of evolving crisis in the Middle East. We've been sort of on the doorstep of the precipice cliff ever since we were together in Fujairah 3 weeks ago. We haven't stepped over the cliff yet in terms of the retaliation that has been expected from the October 1st events that saw Iran strike Israel. Your thoughts, and from an India perspective, where is this going? How do you think it plays out from here?
Well, of course, India is very worried because it's in our neighborhood, and we are kind of hugely. There's a big interdependence between India and the Middle Eastern country, most of them, and so it's very high on the radar. In fact, when our Prime Minister met the Iranian president yesterday in Russia, that was right on the top of the agenda, and India was kind of assured that Iran is doing its level best to make sure that there is no escalation. And we have got kind of the similar sentiments coming out of the UAE and some other friendly countries in the region. So my own assessment as of today is that probably this might continue in the sense that Israel is probably has got its own agenda, and they're going to pursue in their own way. And the US is trying to persuade them to come to the negotiating table. But my sense is they think it's an opportunity for them. And until we know who is going to sit in the White House next, I think Israel will continue to behave the way it's behaving. And therefore, I don't see much hope there as far as all the parties concerned coming to the negotiating table. But the fear that it will escalate, go out of the control, and therefore the oil prices may go through the roof, I think that for the moment looks unlikely, because Iran has shown restraint, and we have also seen that other stakeholders have also shown it. China is putting a lot of pressure, we understand, on Iran, and Russia is doing the same on Iran. So that means that even if there is a kind of attack by Israel, it's probably not going to be on oil and gas installations, or on electricity installations, or on nuclear installation. If kind of these three areas in terms of return fire from Israel are ruled out, then I think probably it would not escalate. And this is already reflected in oil prices, as we can see, in the gas prices, as we can see. But that is still not really kind of gives a hope that we all need, because for India, we have 9 million Indians working in that region, and we have Indian companies that invested heavily, and companies from there also have invested heavily in India. There is a kind of, we are now working hard to build kind of India-Middle East economic corridor. There's a lot at stake. And India has invested heavily in terms of building goodwill and friendly bridges with Saudi Arabia, the United Arab Emirates. And we hope the kind of plans that the United Arab Emirates and Saudi Arabia in particular have for bringing kind of stability in the region and building a new future, which is more about economic prosperity beyond oil for everyone. They succeed, and India is actually trying its level best to support such initiatives from Saudi Arabia, United Arab Emirates, and countries like Oman and Jordan and Egypt and a few others, so that we can together, India also joining as part of the India Middle East Economic Corridor, we can build a new Middle East, which is based on justice, where the Palestinians are also given their right in these, two states. And at the same time, Israel does feel threatened, or Iran does feel threatened. And whatever sanctions and all those things are there against countries like Iran are also gradually lifted. So India has a huge stake in terms of what happens there. And that's why, deep engagement with different countries, including Israel and Iran and Saudi Arabia, UAE, as I mentioned. So we are quite hopeful. The only worry is when you look on the ground, there is oil everywhere, there is gas everywhere, and there is dynamite everywhere. So one really worries that the parties may try, but at the same, what if there is some accident? If there is a spark and there is some accident, you have dynamite, you have oil and gas, it would be very, very difficult to control. That's why what we need to do, we must do it today.
Mike, sort of coming back to the biggest story really in the world at the moment, which is who's going to win the US presidential election. And through that gateway comes the answers perhaps to a lot of other of these questions that we're talking about. In the context of the US, is a Harris or a Trump presidency, a victory, more bullish or bearish for oil prices? I mean, it seems to me the U.S. economy just got upgraded by the IMF the other day in its terms of its GDP growth. Equity markets they couldn't be banging their heads on a higher ceiling every day of the week here. Employment numbers look pretty strong. I mean, where does this go from a bullish, bearish point of view, the outcome of this election?
Yes, I think it's notable. I'm glad you noted that, Sean, because IMF did downgrade global growth by upgrading U.S. growth. The election obviously is the big wild card. The market's already pricing for pretty much leaning towards a red sweep, which I think is not going to happen. I think my base case is Harris will have the first female president, but we'll have a Republican-leaning Congress, which will probably be a check and balance for the unstoppable deficit spending. But the bottom line is, if Trump is elected, it means drill at will, probably means a weaker dollar, and it would enhance one of the most enduring trends in commodities, and that is gold going up and crude oil going down. The most significant point for that is from February 4th, 2022. That was the date that marked the unlimited friendship, the announcement of unlimited friendship between President Xi and President Putin. Since that day, gold is up about 50%. Crude oil and the Hang Seng are down about 20%. I'm fearful that those trends will continue. And the bottom line is, for a U.S. standpoint, is first of all, we need to have a clean and clear election result. Hopefully that will happen. I think it's going to be more, like I said, leaning towards Harris for the presidency. And there's also the issue that we have one of the most elevated U.S. stock markets in history in many measures. You just look at 2016, the stock market cap to GDP was about 1.3. Now it's 2.1. So the highest in about 100 years. So the market's very expensive. And to me, that's a major risk for all markets, most notably commodities, if we just have a little back and fill in the U.S. stock market, and the election could be part of that. But overall, the way I see it is gold, I think, will probably, the worst case for gold is if Harris is elected. We're overdue for a bit of a correction in gold. I'm still bullish long term. But the bottom line from a commodity standpoint, a crude oil standpoint, is drill at will. And from a grain standpoint and the tariffs, it's bad for crude oil. It's bad for the grains if Mr. Trump is elected.
Carol, drill at will obviously is more oil in that sense. One would think of the U.S. oil production increase this year has been minimal. The Trump could be bearish in the sense if there's a lot more supply coming on board. Where do you think this all leaves OPEC Plus, as we all are also waiting? We're waiting for U.S. election result. We're also waiting for OPEC Plus decision on whether they're going to continue with their plans to increase supply from December 1st, which of course is only 5 weeks away. Your thoughts on how OPEC Plus could be looking at all of these factors and what decision they're likely or should make?
First, Sean, just a quick word about
Please.
Harris versus Trump.
Yes.
I don't think it's clear cut that Trump comes across as definitely pro oil and gas industry. But when you look at the record production achieved in the US in terms of both oil and gas, they happened more under a Democrat president and not a Republican. So that's one thing that we have to remember. That's not necessarily bad news. But of course, we saw with Biden-Harris administration the ban on issuing licenses for future LNG exports. And this is where we have perhaps greater uncertainty. But with oil, while of course in the short term, if Trump is elected, domestic industry will receive a boost, but at the end, they will remain guided by international oil prices. It's a very fragmented, very competitive industry, a private sector involved. So there is some support, but not necessarily Harris bad, Trump good for oil. For gas, definitely we're going to see perhaps a removal of that ban on LNG exports. Then there is the other dimension to global oil prices. This is where something that OPEC wants to factor in is the impact of US relations with China, Russia, and the sanctions on Iran. Because we know that, for example, when Trump came to power, he managed to reduce, well, he did not manage to reduce Iranian oil exports to zero, but he did reduce them to a very low level of 500,000 barrels a day. Under Biden administration, they turned a blind eye to the enforcement of those sanctions, and we saw Iran putting much more oil in the market. The same thing, what about the relationship with Russia and potential sanctions more on Russian oil and gas? These are also questions open for discussion. With respect to OPEC Plus, when I hear people asking about increase in production and proceeding with plan, most likely they will proceed with the plans that they announced. But mind you, OPEC Plus is already overproducing beyond its quota, because you do have the endless ongoing problem of the cheaters, the likes of Iraq, the likes of Kazakhstan. They have been constantly overproducing, and despite their promises of compensating for this overproduction, we are yet to see them delivering on those promises. So there's already more barrels in the market than that should have come from OPEC Plus. And I'm not quite, I mean, of course, if there is more barrels coming based on the decision that they took a few months ago, that they will start unwinding the voluntary production cuts, and under existing market conditions when it comes to demand and non-OPEC plus supply, then we should expect to see a downward pressure on prices, as many are expecting for next year. But geopolitics can change the equations. That's why I say that kind of last disclaimer, the uncertainty at the moment in markets.
Narendra, I wanted to get your thought. You mentioned earlier that your Prime Minister Narendra Modi met yesterday with the Iranian president counterpart on the sidelines of the BRICS summit in Russia. But most notably, Mr. Modi also met with the Chinese leader, and there was a sense that there's been a lot of tension between China and India in recent years since the 2020 border clash, where 20 Indian soldiers were killed by Chinese counterparts in the mountains there with the border disputes with China. What is the outlook for that meeting yesterday? What significance does it have just for the relationship? And then maybe we might build out on a more wider macro significance.
Well, of course, there is some thaw now, and which is I would say that we'll be very cautious, and I think it's a good beginning. And but there are many issues, and as you know, China is not an easy country to negotiate with or to deal with. And we have known China for thousands of years. You know, western part of the world, China discovered only recently, but they are our neighbor. We have known them for many, many, many centuries. So it's a very difficult country to negotiate. And China, at the same time, you know, they say something and they do something else. It's like a bus which says it's turning left, but it turns right. So it's a very difficult country to predict. But at the same time, you know, China, we don't look upon China as an enemy, but China is a problem, and there are issues. Now, even to negotiate with China is very difficult, as I said, because they can go 2 steps forward and then 3 steps backward. And so we are dealing with it. But at the same time, I think what has happened yesterday in the meeting between Chinese president and our prime minister is a good beginning. We are very cautious, extremely cautious. And we'll see how it goes. The next meeting is now scheduled early next year, hopefully, and probably, between a National Security Advisor of India and the Chief of Foreign Policy of the Chinese Communist Party. So let's say what comes out of it. For right now, for the people of India, the biggest issue is, of course, the border. We want to make sure that the China is not intruding into our territory or not attacking our forces. And the second step, of course, would be to kind of go for normal economic ties and the trade ties, which seems to be China's, focus as well. Chinese economy is struggling. They need markets like India for their products, and therefore probably that might be the reason that China had shown some kind of willingness to sit across a negotiating table. As I said, it's a good beginning. Both India and China put together are roughly 2.8 billion people on the planet, and together with Indonesia, we have 3 billion people in this part of the world. So you can imagine, what is at stake. But that said, at the same time, I think if you saw the kind of good vibes and the goodwill at the BRICS summit yesterday, I think it's extremely encouraging, with the Iranian president there, United Arab Emirates president there, with Ethiopia's president there, is the new BRICS now. And so which brings
I might just come in on that point. I mean, just sort of connecting to the earlier point of how important Middle East oil supplies are to India. They are also critically important to China. I mean, you both have a very common risk or vulnerability to disruption from this region. And yet we don't see the muscle of China and India diplomacy at work here to try and resolve, to try and contain Netanyahu, I mean, it's all in the American camp. Where is China and India common ground on this particular issue? And are we just not seeing it? It's happening under the water, but it's clearly nothing overt that is obvious.
Well, the problem is that China does not believe in building that kind of relationship. China has its own worldview, and they just ambition seems to be to replace the United States as the superpower of the world. They think India or any other country, doesn't really matter, but that's not reality. Reality is that India matters. The only country which can counter the growing influence of China is India. And now, we have the size, we have population, we have a growing economy and everything. And at the same time, the problem is that if China wants to make that the future of Asia is like unipolar, dominated by China, China being the hegemon, right from the Middle East to the Pacific and all that, is not acceptable to India. It's not acceptable to Japan, to Australia, to the United States, to Vietnam, not even to Singapore. So now that is the story. And the problem is, but China doesn't really care. They think they have their own worldview. And therefore, they don't want to build that kind of partnership where India and China can work together, let's say on the Middle East. Let's say talk together with Israel. And let's say to work for the two nation, a home for the Palestinians. They can do that, ideally. If you look at the size, look at the strength, look at their stake, in the Middle East. But they don't do it because China does not believe in partnership. They don't. They just want everything to be the Chinese. They want their own way. They just want to be the new United States of America. That's the problem. But they're not the United USA. They're not. They may be economically stronger than before. They may be militarily stronger than before. But China is not what the US is. The US is all about this great institution they have built over centuries. Where are those institutions in China?
Let's come back to that point as a follow-up, if we can, of time, because I do think that is there's sort of global institutions, the sort of rules of the road institutions. But Mike, I wanted to come back to you and get a sense of where the fundamentals are in the US as we close out the year. We've had a flat year in terms of production growth. Inventories are looking like they're building a little bit, but tight. Inventory or refining runs look pretty high. Where are the fundamentals in the US oil supply demand balance as we close out this year?
Very bad for prices. Supply is increasing, demand is decreasing. Look at just net exports of U.S. liquid fuels. It's around 2 million barrels a day. That's about the highest ever. If you include Canada, net exports of liquid fuels, and that's not just exports, the excess of supply versus demand is around 6 million barrels a day. Just around 2019, it was only 2 million barrels a day. So I do like that mantra people keep calling for U.S. production decline. It's one of the most enduring trends in crude in all commodity markets, and that's that excess of supply versus demand in the U.S. Diesel demand in the U.S. is declining. Gas demand is declining. Paperboard demand is declining. Yes, they've stabilized recently, unleaded gas, but diesel is a key thing. I'll be publishing on that in a few hours. So I think like the price of diesel, the average price is probably going to drop below 3. The peak during 2022 was 5. It's just the overall trend. The key fact is what's really happened recently. The most significant thing is the Fed cut 50 basis points, yet bond yields went up 50 basis points. That's a very bad sign that the Fed is too early. And to me, the big picture, the macro for all of the U.S. is that U.S. stock market has to stay up. Otherwise, we have pretty significant deflationary forces from natural gas, from corn, soybeans, and wheat, from the grains, from petroleum, from crude oil, from diesel. And the only thing that's really been doing well, obviously, is gold. We know because of the global geopolitics and deflation. But the key thing I'm really watching is copper. If copper can sustain above $10,000 a ton, that's a sign of revision and revitalization and China coming out of it. But I think copper is more likely to drop towards $7,000 a ton or $3.50 a pound. And that's just a normal autocorrelation force. And the key bottom line is the U.S. stock market is overdue for a little correction. And I just look at like the HSI this morning, the Hang Seng Index. It's dropping again. We've seen stimulus, but we're seeing bounces in bear markets.
Let's just quickly do the survey question. Who will be more bullish for oil price if they win U.S. election, Trump or Harris? As Carol pointed out, the Democrats have been pretty good to the oil markets in recent decade, including Obama sanctioning the permission for exports of oil, which until 2016, I think it was illegal to export oil from the U.S. Dr. Carroll, I wanted to get your thoughts on the stress within OPEC Plus at this time. You sort of punctuated in your earlier comment, Iraq cheating, Kazakhstan, so on. Where that harmony is at the moment. We've seen Angola leave in recent years. We've seen Qatar a few years before that. I know you track and work closely with the African oil producers. Where do you think other African countries are in Nigeria? Is there any other risks within the sensitive space of OPEC Plus as they try to navigate this much more challenging environment of weaker demand and lots of supply?
It's not the first time that OPEC faces these kind of challenges that they are facing today. And the membership has evolved over the years, though I have to admit that the frequency of countries leaving OPEC has kind of increased in recent years, although it remains not a threat to the entire organization in terms of membership. But that was something that we have noticed in terms of who is leaving and when. Is the risk continues? Yes, of course, it will always be there, because at the end, OPEC and OPEC Plus today has never been a coherent entity. You do have countries that are even at war with each other, fighting each other. You do have very diverging interests. But as long as the biggest players within OPEC commit to what they are saying, to their production decisions, that I think will continue to drive the organization. And the reason why I mentioned Iraq, because Iraq is an important producer within OPEC, but it seems that it is getting away with murder. And I don't know how you can implement any kind of serious mechanism to get Iraq to stick to its promises, because it is not a country that we can ignore in terms of not delivering on its promises. It is, I think, if I'm not mistaken, the second largest producer after Saudi Arabia. So the challenge will continue to be with OPEC. And as long as market dynamics are where they are today, OPEC will be facing a tough ride, and its unity would be more important than ever. But I will continue to keep my eyes on the key players within OPEC, that is primarily Saudi Arabia and Russia. And the usual suspects, the good news is that we know who they are, we know what they are going to do. So there are no surprises there. That's if I were to look at the positive side of a rather unsettling story.
Narendra, last word to you. I wanted to get to your saying. I mean, you kind of answered it at this last part of your previous comment, which was the BRICS are meeting in Russia. This is an emerging idea. But as you articulated, the challenge between China and India at the center of BRICS kind of, in a way, is the fracture before it even begins. But I wanted to get your thoughts as the BRICS emerge, and particularly through the prism of the global rules-based order. It seems to me a little bit that the US and Israel are blowing up the rules-based order. I mean, you saw Netanyahu's speech at the UN recently. He called 180 countries essentially dirt. US and Israel ignoring the International Court of Justice in The Hague and dismissing it. And there's bills going through the House of Congress at the moment threatening to arrest and sanction all of the employees of the International Court of Justice. So my sense is, where is the new rules-based order going to come from? Can it come from the BRICS as Israel and the US continue to go rogue?
Well, I think, when you look at the BRICS and the construct of BRICS and the agenda and the deliberation, it's more like a movement at this stage. Of course, it has got institutions now. Let's say the New Development Bank, which is a kind of response to the World Bank, because World Bank, they refuse to go for any kind of internal or external restructuring or reforms. So the result is that majority of countries, the global south, they feel very frustrated. The problem is that, what they call the rule-based order is basically the Western, the rich countries' effort to ensure that they continue to occupy 100% space in the global cockpit, be it energy, be it security, be it climate, be it trade, be it anything, even vaccine. And it's a basic, that has led to frustration in the global south, especially the large economies like India and China and others. They feel, look, what's kind of, we need a new world order, but they want a status quo, because status quo works well for the rich countries. And if you don't agree with them, they say, oh, this is not the rule-based order. So they have monopolized this narrative that only when you listen to them, only if the world kind of works, behaves, acts like the way they want, is rule-based. Otherwise, it's jungle raj. That's what which is it's a joke. I mean, now the BRICS is a movement. What BRICS is not against the West. It's not against the rich country. It's basically the manifestation of aspirations and ambitions of the country, which are actually growing fast economically, socially, and even politically, depending the political system that they follow. India has a similar system like in the West. China has its own system. Russia has its own system. Iran, they go for elections and everything. They may not be as democratic as India or in the Western country, but they have kind of these democratic bones somewhere. So therefore, it is important that the world has changed. The West, the rich world, has to recognize, A, the world has changed. B, the gravity center for energy in particular has already moved to our part of the world. But the problem is they want a status quo, so they use all kind of things, sanctions against this country, sanctions against that country, that kind of law, that kind of narrative, because this was very well for them. This needs to be challenged. The BRICS is one movement that is challenging. It's one of the several movements that is challenging the status quo that West want to hold on, because it has served their interest well for decades now, and they want to hold on to it. But the world is crying for change. Majority is crying for change.
It does look like the world, the West, or as you call, are committing their own kamikaze, in the sense that they seem to be blowing up their own world order with the positions they've taken in recent times. But this is a subject worth exploring. BRICS in Russia meeting. I think it's really a critical time. It would be great if there was 1,000 journalists there from all over the world covering the minutiae of that gathering, and have been able to get inside everything there. So it is increasingly a very critical space, and we keep observing it. But we have to close up shop here today, because Dr. Carol Nackley has to get back to work, and Mike McGlone has to keep Mr. Bloomberg happy. And Narendra Taneja, thank you so much for your time today. Really appreciate your insights. This is the Power Panel. There's no two ways about it. We'll have to have you back soon again. Block Carol's diary immediately. All the best, everybody. Hope to see you soon. Take care.
Thank you. Bye-bye.
Thank you. Thanks, everyone.